Being an entrepreneur is such a weird, isolating journey.
Episode 54 of the BIG5D Podcast is brought to you by the sponsors of the 2025 BigFive Summit in Cape Town, ABSA Group, Dialogue, Inspire, Afregis, NetWords, and Pragmatica Digital. Thanks to all these great companies for supporting us, and we will see you at the 2026 BigFive Summit in Cape Town. Welcome to episode 54 of the BIG5D Podcast. Today we again tap into content from our recent BigFive Summit in Cape Town. We're bringing to you a panel discussion called Supporting Startups, How Financial and Non-Financial Resources Are Essential to Startup Success. We have three great panelists: Lucie Fink, the CEO of Thinkroom Consulting; Egla and Ntumba, the CEO of MsFit Ventures; and Thapelo Ntite, who's the co-founder of Botlhale AI. All three of these leaders had a lot to say about what it takes to really support startups in Africa, and we hope you enjoy it. Okay, so we're talking about supporting startups. Big, broad topic. I think there's a lot of ways a lot of avenues we can go down with this. But I want to start with the basics, which is, who are you, what do you do, and how does it impact startups? Briefly, and we'll dig in from there. Lucie, why don't we start with you? We have another one. Great, thank you.
So I think I sat in the wrong place.
Okay, sorry. The other conference
here I am. I'm going first. What I mean is I'm sitting here, so I get to go first. Awesome. Afternoon, everybody. So my name is Lucie. I am here representing Grindstone. So I'll try and keep it short as to what we do and who we are. So Grindstone is a partnership between Thinkroom, which is an SME development business, and a Knife Capital, which is a VC. So Grindstone has been going for 10 years. We have helped over 175 startups. The lovely Botlhale over here is one of our amazing success stories. So 175 startups across all life stages. We traditionally started with the accelerator model, but really are pivoting into a lot of venture building, so literally more bespoke help for startups, because we find I think that is really what startups need at the moment. It's those individual assessments and help in their business, as opposed to a wide-angled help. So yeah, great to be here.
Fantastic. Egla, you now have a microphone. Please use it.
I do. Hi, everybody. I'm Egla Ntumba, managing partner of MsFit Ventures. We're not many years old. We launched the fund last year. And really what we do is we provide working capital, so debt, to SMEs, typically female-led or gender-diverse teams, and then we provide lots of hands-on support. So we found that just providing capital to small businesses, it's a great thing because they need access to capital. But, you know, to the point that you just made now, Lucie, that hands-on support is so important. So that's a lot of the work we do. It's 100 million rands book, and we're actively investing. So super excited to be here.
You recently made your first investment, is that right?
I did. Well,
why don't you just tell us very briefly what that is?
So we recently made our first investment in a really dynamic team, two sisters who've been running a corporate wellness company for over 25 years. Or rather, they celebrated their 25th year this year. And they've never gotten a business loan or any kind of facility like that. They've only been able to get personal overdrafts that they've then used for the business. And this is a business that's been profitable, you know, really nice margins, very liquid and everything. And we saw the opportunity to support them to go to that next level. And with the financing that we're giving them in terms of working capital, they're now able to double their revenue this year, just from that support that they're getting to be able to do more. So we're really excited to keep supporting those kinds of businesses where, you know, we can add value, where you're already doing incredible work, but we can just take you, you know, to that higher level. So super excited.
Tell us about you.
Cool. Afternoon, everyone. So I'm Thapelo Ntite. I run a startup called Botlhale AI. So as a startup founder, by default.
Yeah, I've been looking at the name. Say it again, because I want to make sure.
Oh, Botlhale.
Okay.
Botlhale
I had it
AI.
way wrong.
So it means knowledge or intelligence in Setswana. And as a founder, by default, we do need support. And basically what Botlhale does is that we help businesses engage with their customers in languages that their customers understand and trust, specifically African languages. And we do this using AI-powered natural language processing. We've got 2 solutions that we offer to businesses. So we've got AI agents that can make phone calls and receive phone calls for sales, collections, and support. We also have post-call QA and analytics to monitor calls happening in African languages or in multiple languages on the continent. And then lastly, because we know that the technology, goes far beyond customer engagement, we've got APIs to enable other organizations or innovators to use their own to use this technology within their own solutions.
So we have 1 startup and 2 startup supporters, essentially. Is that about right? Okay, so that should balance well, I think. So now, the concept here again, what do startups need, I guess, broadly speaking? And who's providing it to them? And what form does that take, essentially? So if you want to break it down into 2 simple buckets, there's the money bucket and then there's the everything else bucket, right? There may not be a good answer to this, but which is more important? Lucie, try you first. Not just because you're sitting there. I'm going to go to somebody else first down the road.
I think one of the things that we really try and get into our startups' minds is the importance of the data room. No one's going to invest in your business if your data isn't in
It's
order.
never really an actual room, is it?
No.
Okay.
No, absolutely. But
It's a folder online somewhere, or
exactly.
Shared folder.
Let's still we'll call it
It's
a
a shared
data room. I
folder.
get it. Yeah.
But so one of the things that we actually started probably about 2 years ago now is we applied for a grant. And we started a back office within Grindstone called Grindstone Boost for exactly that reason. So it is to help startups with the actual physical, tangible things that they need, whether that may be an accounting software, may be a sales plan, maybe it's a value proposition, legal documents, all of that. So literally, it's been running now for a year and a bit. Unfortunately, it was funded by USAID, so it is...
We all know what happened there.
We all know what happened there. So it's paused. We'd like to think it's not dead. It's paused, but super important. Obviously, we also have a small fund called the Grindstone Ventures Fund, which was set up literally to help Grindstone companies. But predominantly what we do is the assistance. So obviously, I like to think that's a little bit more important. But I'm sure you'll disagree with me.
Not fully. So the biggest reason startups fail is access to capital by a large margin.
One.
So that's kind of one. So firstly, give me money, and
Yeah,
then
I mean,
and
money-
then support me.
No one's discounting the importance of money, but
Yeah.
I guess really it's about what else is there,
Yeah. So I mean, again, the first reason that startups fail: no money. Second, access to market, which is where that support comes in. So you can have access to the money, great, but now it's what else are you providing in terms of value? Because actually, a lot of the time we find that when startups just find the money, sometimes, I'll tell you a story. A friend of mine invested in a small business, and what they were doing is they were buying all out-of-season clothes from the South African retailers and going to the peri-urban areas and selling those out-of-season clothes to the people in those communities who don't otherwise have access to the big cities, whatever. And this gentleman was doing really well with this business model, which is kind of similar to what I think Pharaoh is doing, kind of. So really popular in the townships and doing really, really well. And then he was at a stage where he needed to scale. This friend of mine gave him, with other people, gave him $25,000 as an angel ticket. He took all of that capital, put it in a giant warehouse and kitted it and everything. And then time came to buy more inventory. He didn't have money because he put all the capital in a giant warehouse that he didn't really need at that time. So the support to be able to make decisions like that, for somebody to tell you, hey, listen, maybe don't put the whole $25,000 into this giant warehouse that you don't need. You know, these kinds of things are really, really important as well.
You're starting a business, you're starting a tech business. Other than capital, I mean, what did you feel you needed the most right when you were getting started?
Yeah, so I'd say it's like a bit of both. So like financial and non-financial support. The challenge, starts to arise when you get more of one than the other. And in many cases, you find that maybe you're getting too much non-financial support that you actually can't execute on everything you're learning and the strategy.
Kind of gets to what Zach and I were talking about earlier.
Yeah, exactly. But again, on the financial side, I think sometimes, access to sufficient capital to execute properly is also a thing, right? So yes, there might be some capital that allows you to move from 0 to 0.2, 0.5, but it might not be sufficient enough to actually carry you all the way through. And what you then start seeing in the ecosystem, I know I've seen this a lot in South Africa, where you then get founders or startups moving from one program that might have some financial incentive to the other. So you end up in a program and you know everyone who's in that program because you were in 3 other programs together and you're all doing it for funding, because honestly speaking, the content is very similar, what you're learning is very similar to what you already know. But having access to that sufficient capital that can allow you to execute for 12 to 18 months, I think that's really, really crucial.
Mm-hmm. So I'm going to throw an idea out here that you're probably going to find annoying, but startups have been at it a while, right? Why isn't the playbook just dead lock solid, like just follow this list here and you're going to win? Why isn't it that easy? Because it seems like there's so much info. I'm just being provocative. Just don't give me that look. But it seems like all the mistakes have been made. The content is all there to be replicated, et cetera, et cetera. Why isn't it easier?
I mean, every startup is so unique.
Okay.
And if you're operating in Africa, your challenge is just so unique, from one even geography to the next, that you can't have a one-size-fit-all situation. In my
no startup in a box?
There's no startup in a box, okay. No, unfortunately not. In my previous life, I was at DP World's Corporate Venture Capital Fund. For those in the room who don't know, DP World is one of the top 8 global port operating companies. And their corporate venture capital fund invested in supply chain logistics and healthcare startups. One of the startups that we had invested in or have invested in from that fund is a pharmaceutical distribution startup in Nigeria. And really what they do is they are digitizing the whole process of distributing pharmaceuticals to the pharmacies. And
that sounds like a really hard problem.
It's, at first, it was like, oh, whatever. It's like a cool platform, smoothing over the whole distribution thing. It's going to be great. And then they bumped into some real serious logistics problems where at one point they almost had to package the goods and give them to a bus driver who was driving intercity buses to say, go with these products and then deliver them to this other person, because that was the easiest way to actually move the products within the cities. And somebody operating outside of that context, it sounds so strange that, oh, you're packing pharmaceuticals products and giving them to a random bus driver and delivering, but that's how things move.
Maybe some holes in that, but yeah.
No, but there's no check that these products are being transported at a certain temperature, whatever. So it's not the best way to do it, but that was the best way to do it in that market. And if you don't have that context to know that in this particular market, this is what works, sitting from the outside looking in, you might say, no, don't do that. Do this other thing that's way, way more expensive. Or, follow this particular handbook that we've seen work in, Singapore. That wouldn't work, Mm-hmm.
So you're the one with the box.
So
closest to having the box, right?
The closest to having the box, exactly. But we have found, honestly, I would say probably in the last 3-4 years that box has changed so much. We used to run a very typical accelerator program, so it was made up of workshops, of this, of that, of mentorship. And now we are truly finding that we have to be more bespoke. So we are doing programs for a smaller amount of startups, but more hands-on. So it is literally walking the journey with them, because you cannot have a one-size-fits-all. We also own a learner management system, which is made up of videos across 12 different pillars of entrepreneurship. And we've expanded so much because we start and we do assessments with them to determine their life stages. And
Just like an e-learning thing for startup founders?
An e-learning thing for startup founders. Exactly. But
that's a startup in itself.
It is. It truly is. It's called Thinkubate, and it's something that we have completely self-funded. Just over the years of learning, like you say, doing the same thing and imparting the same knowledge all the time, but there's so many different journeys that you can take within this learner management system, which is incredibly bespoke per business.
Okay, question answered. But when you were starting out, did you feel like if you had some of the pieces of the puzzle that go into the out of the box startup, do you feel that it could have been more? Okay, this has been done before. Here's the checklist of how to do it. Could it have been easier? Could it have been made easier for you with some of the things I'm talking about, which apparently don't exist? But.
Yeah, so I think fortunately for us, we joined Grindstone quite early on in our journey.
Okay. So you can talk about her box.
But also I think generally in the space there's best practices, right? You have to validate before you invest heavily within something. So there's a lot of the check boxes that you can do initially, but like I'd say even with the check boxes, a lot of it is still very unique to your experience, and very unique to your company, your startup, and your journey. And those sort of things cannot be taught. The challenges you face with the team, those are challenges that some people don't face. And they come in different shapes and forms. And some of these things you can only learn through experience, I think.
Can I add one last thing to that? I also think
I'm not talking, you can talk.
Okay, perfect, thanks. Is so incredibly important is startups learning from startups. And I think you can speak from experience in that the Grindstone, the community of alumni is so incredibly important to pull from each other, because who better to know what startups are going through and their experience than their fellow startups.
Okay. So, Zach and I talked about a bunch of things, one of which was this notion of, and I'm going to aim this at you as the startup founder on this panel, the mistakes that founders make when they're seeking funding, and the one he seemed to be obsessed over was not studying us and our approach and our portfolio companies, et cetera, not doing the due diligence on the person you're going to ask money from. Did you make that mistake? Or did that resonate? Well, I don't know if you're here, it's fine if you weren't, but did that resonate with you? Does that notion resonate? Does it strike a bell? And I'm going to ask everyone to answer that question.
Yeah, absolutely. So I think there definitely is a certain level of due diligence you need to do on whichever investor you're talking to. The size of the fund, their ticket sizes, because that also gives you an idea of how much importance you hold in their eyes, right? If it's insignificant, that's also a signal. But also the mandate, the verticals that they invest in, and all of that. So that's very important. But at the same time, you're kind of trying to maximize for the best outcome, right? So you might be aware that, okay, you've got a tier one, not even tier one, you've got like your priority hit list, but you've got these other investors who, aren't ideal, but you'd invite into the company because, again, you're trying to maximize for the outcome that you want.
Yeah. Zach, I asked him, was that arrogance or laziness? And he said laziness. I thought it was going to be arrogance, like, oh, we already know, So, in your case, it was neither, I'm sure, but yeah. Do you have a reaction to that notion? I mean, does that resonate with you?
It really does. First of all, you know, when I was at the corporate venture capital fund, we had very specific mandates. You know, supply chain, logistics, healthcare. If you come with an ed tech or a fintech, there's nothing I can do for you. So, you know, you're wasting your own time by just sort of blanket reaching out. But also, you know what? I do agree that it's a bit of laziness. That, you know, you'll go through the time to seek me out on LinkedIn or find my email address, and then you'll send me something that is so clearly out of my mandate that sometimes I just don't even respond because it's
All you have
just
to do
a
is
little bit
lead
of
with
reading.
something that shows that you did some research.
Just a little bit.
Yeah.
If you read anything
You don't have to know everything.
that
You
we've
show that
put
you
out
learned
there,
something, right?
exactly, you would know. But also, now it's been really interesting because now that I am fundraising for MsFit Ventures, and we're only raising $5 million, which is 100 million rands. In rand, it's a lot. In dollars, not so much. But I found myself earlier in the year, basically at this little conference with a bunch of high net worth individuals, and it was a great space for me as an emerging fund manager to be at because that's the kind of demographic we're targeting. We're not really targeting big institutional money. So I'm now speaking to a bunch of people, and then some people to just get it, and I immediately know their mandate, and I'm like, okay, cool, you're going to work out, you're going to work out. And then there's one gentleman, I had been trying to speak to him for the past 2 days before, and then on the third day, I finally get to sit down with him. And then I ask him, you know, what is your mandate? And he explains to me the mandate, and immediately I know that's not a fit, because his mandate is he just wants to invest in blockchain and all these kinds of things. We're not doing blockchain. I'm not going to spend my time and energy investing in this particular human. Then immediately you disqualify that and you move on. Putting more time and doubling down on that would just be a waste of energy. So that's me as somebody raising an investment vehicle, right? So that's how startups should think about it as well. Like, just don't put energy in something that's not going to work out.
This seems like something you can teach.
Absolutely. I think of it from a little bit of a different angle. Once you've done your homework and you've got your mandate and all of that, it's also all about the relationship fit. I think people downplay that. It's a long journey as an investor in your business. Your business is kind of like your baby, right? Do you send your child to a school without doing your homework on the school? No. About the teachers. So I think it's also that is a very big part of the journey, is making sure that you as a founder will actually get on and gel with the investment team because, you know, they are going to be such a pivotal part of your business assistance going on.
So kind of following on that, what if you were to name 3 things, if somebody walks in and you learn 3 things about them that tell you that they're not going to be successful, what are those 3 things?
They're not going.
And we could answer it the other way too, but you probably, at some point over a glass of wine, thought about it.
I can go, well, for sure, for me, as a founder that's not self-aware.
Not self-obsessed.
Not self-obsessed,
No, I
but
know it's self-aware.
self-aware
Completely different thing,
to
yeah.
just know that my strong suit is not, I don't know, finances or whatever, and knowing your personal
Know what
blind
you're good at and
spots.
what you're not good at.
Yeah. That's a really, really important one. Somebody who is not coachable. I feel like there's this point where you get to when you have a business that you're launching where you've taken insights from other people and it's useful until a certain point and then it stops being useful because then people weigh in and then it makes you question what you're doing and then it becomes unnecessary. So there's a point until you take insights and advice and then there's a point where you have to stop. But still somebody who's coachable where you can see that when there is a really important thing, and I can see as somebody who is outside of your business, I can see that you're running into a wall, you know, just the ability to take that on and process it and weigh it to say, you know, is this worth me considering further or not? That's really important. Someone who's just like, no, I'm still going to do what I want to do, that's a problem. I've seen it happen. I've seen it fail.
Is that almost guaranteed failure right
Yes. Because then that person just runs into a wall and, you know, it's like, we told you that this would happen and now it has happened. and then you see that keep happening, that's a problem.
Does someone like that ever change?
No, I don't think so. And that's a really, really, really difficult one.
I mean, you can have 3 failures, and by the 4th time, you might want to assess what led to the first 3 failures.
Yeah, you would think that.
They usually come up with the wrong conclusions, right?
You would think that. We had a startup like that in Ghana. The founder was very set on, I'm going to do this thing. His co-founder said, I'm the local person here. You don't know, this is not going to work. We told him as investors, this is not going to work. He went and continued. The co-founder actually left and went and started what he said was going to work.
I bet he's doing all right.
He's doing all right. At the end, the business that stayed, unfortunately, had to be wound down. So,
Okay.
yeah.
Did anyone tell you these 3 things will lead to your failure if you do them, if you don't, sort of get these out of your mind? Did you have any conversations like that before you launched your company? Like, what are the things I need to fix about myself or understand that I need to avoid doing in order to be successful?
Yeah, I think everything that you've mentioned generally has come up in one way or the other. But I guess sometimes the difficulty is, when you're getting advice from so many different people with so many different perspectives, and you also have a point of view that no one else has, it's sometimes difficult to consolidate all of that. So you still, at the end of the day, need to make that decision and sometimes stick with that decision, knowing very well that it might lead to failure, but it's a decision you're making nonetheless, because that's part of your job as a founder. Yeah.
Okay. So what do you think will be, this is for you, given what you do, how is this sort of support system for a startup going to evolve? What new things are going to be added? What new skills are going to be taught? How do you evolve what you do for startups to get them off the ground and not crash?
So I was also listening to your previous talk and what you were asking. I mean, AI is so...
Okay, I guess I should have seen that coming.
Yeah, you should have seen that coming, exactly. Because I truly believe that you can't go forward unless you actually embrace it in any industry, not just in the startup world. So from our perspective, we're adding that as a curriculum on our Thinkubate platform.
Okay.
So it is really something that we are hugely embracing. We were talking about being prompt engineers. We actually all just took the course recently to learn how to do it. And so,
Do you agree that that's becoming obsolete?
Yeah, absolutely.
I think it already has, but whatever.
Absolute, yes. But yeah, I would say that, and I would also say that, again, as I mentioned previously, it's not the one size fits all. It is so much becoming more about venture building and literally taking them and walking them through the journey. We're doing lots of investment readiness programs at the moment. So we've got...
There's another checklist question. What is an investor-ready founder?
Exactly.
How do you say you are investor ready?
It depends on the investor, right? So
or the stage?
We're doing a program at the moment for a company that, for an investor that likes later stage startups, but they're struggling with pipeline. So they're saying to us, find early stage startups and help them to become later stage startups so that they're ready for our investment. So it's about...
What's in it for you?
What's in it for us?
Yeah.
Well, we run the program for them. So, yeah. But it's all about helping the startups to get to the level where they're ready. And then it is very bespoke again to the investor. What does the investor need? So what is their mandate? What are they looking for in a startup to invest? And making sure that these businesses get to that point.
Okay.
I want to jump in off of what Lucie said in terms of the question you asked about investor readiness. What I've found, usually a startup that's investor ready, regardless of stage, is just one where the founder really understands the problem they're solving. So it doesn't matter what stage you're at. If you really clearly understand the problem and you can really articulate it simply, so many more problems are already solved.
When Zach addressed this, it was all about we have achieved a certain amount of traction and we're growing at a certain rate and our rate of customer acquisition our cost of customer acquisition is clearly dropping. And he had a set of metrics that defined, but every investor invests at different stages. I mean, that investor readiness checklist is going to vary based on your investment thesis, et cetera.
Exactly.
But what made you decide you were investor ready? You needed money? I hope it wasn't that.
I was about to say, we needed money, so perfect timing. No. So I think when we did our first round, we just got to a point where we'd ironed out to a very large extent what we wanted to do. We'd secured some initial enterprise clients, and we just needed to build
You
it out.
bootstrapped for a little while? Could you?
We got some grant funding
Okay.
and found interesting ways to survive.
Okay, what is your most horrifying story about what you were living off of?
A story for another day, honestly.
Drinks are next.
but there is a decision we made back in the day. We rented a house when we started the business, not knowing how we're going to pay after month 4. And yeah, it worked out. Would I make the same decision again? Probably not.
Are you actively raising now?
Yes.
How's it going?
So we're just kicking off the round this week. So
Okay.
yeah, still early days.
Okay. So I want to talk about investing in Africa and startups in Africa specifically for a minute or two. And now there's a bunch of cliches, maybe the wrong things are to said a lot about the continent. That the population, the size of the population, the growth rate, the age demographics all just line up perfectly for. Why isn't it working better? What's stopping more startup growth, more exits, et cetera, et cetera? Is that kind of perspective? I want all of your perspective on that. And what would it take? Are there infrastructure other things that need to improve to support a better startup ecosystem in Africa?
Well, the first thing that the continent really does need is infrastructure. I was on a panel a couple of days ago, and the gentleman who was on the panel with me raised the point that 18 years ago, they had a similar panel and discussed the fact that there is no infrastructure. And then 18 years later, we're still talking about the fact that there is no infrastructure. Africa has a $100 billion annual infrastructure funding gap. If there is no, primary healthcare facilities, if there are no roads, and all of these new things being built, not to mention the old things being maintained, that makes it really difficult. Say for example, when we're investing in healthcare, in order to have a telehealth platform, that is successful, there is at a point in time, those patients are going to need to see a doctor. They're going to need to go to a maternity ward, whatever. If there's no infrastructure to support that, that makes it really challenging to grow the tech on top of that. So that's one big thing that I think needs to be solved on the continent. But also, another thing that I think needs to be solved is the venture capital industry is relatively nascent compared to other continents. It's about 10 years old, give or take. And we just need different ways of solving the access to capital problem for the different businesses we have on the continent. Venture capital is very niche. And the industry has raised about $15 billion over the past 10 years, give or take. $15 billion is a lot of money, but if you then break down the fact that has only gone in about 3,200 deals, and of those 2,300 deals, only 28 startups got about half of that $15 billion. It's very concentrated. There are at least 250... Very few countries. There are at least 250 million small businesses on the continent. Compared to the 3,200 that get the funding, it's a very, very small number. So we need different ways of addressing all of the needs of these small businesses on the continent so that more are surviving, so the different levels of technology are being catered for, different LSMs are being catered for, and all of these things. So that's my key thing. entrepreneurs need to obviously continue doing what they're doing and get funding, but also capital allocators need to think very in a very different way of how do we meet the needs on the ground, not just sort of adapting a model from another market.
A slightly different point, but you might have guessed I'm American, and back in the States, a statement that's made a lot about billionaires is, yeah, you made this yourself, but you built it on infrastructure, tax-supported infrastructure, and good, not perfect, but good quality tax-supported infrastructure, roads, public internet, all the stuff you could think of. It's all there. It was all tax-supported. It tends to be, looked down upon by a lot of people who have achieved great success. This is where we waste all our money. Well, your wealth in part was built on that. Is that a missing piece here, to a large degree? I mean, do you see that as an important missing piece in Africa? The infrastructure foundation to create wealth.
Absolutely. I think it also creates a couple of opportunities. So within itself, if you think of, you solving these problems, the problems that are created by the lack of infrastructure, the problems that are created by the lack of electricity, for example. So it creates those little opportunities for people to think of solutions to them. So I suppose, like they say, for every...
More problems to solve.
More problems to solve, more passionate people. I think that's another thing that we haven't touched on is African, we are incredibly passionate people. We have big problems, and we have the reason to solve those problems.
Okay, so that's turning it into a positive.
We got to see the positive, hey?
Nothing wrong with
South
that
Africans are really good at that.
Okay. I want to wrap up with a quick final thought from each of you, kind of building on this point, which is what one thing that hasn't been said already that you think will make your journey easier or your journey of helping startups easier? We've already talked about infrastructure, talked about access to capital, maybe those are the things. But is there anything else that hasn't been mentioned that you think is an important element that we need more of? I mean, Zach mentioned a bunch of them. What do you guys think?
So one of the things that we haven't mentioned is the access to markets. So what does every startup need? Access to funding, access to markets. So it's about the corporate South Africa saying, how are we going to support SMEs? How are we going to, we do a lot of work on the Thinkroom side with enterprise supply development programs. It's more, we need more corporates that really feel that that's what they want to do that and they want to do it for a reason. And not just to tick a box because they really care. So there are a number of amazing corporates in South Africa that are already doing that and really trying to support the local SMEs on the ground. And yeah, that's one of the things that we didn't mention that I think is so incredibly important. Like you say, if you don't have access to funding, then you just need to make sure that you have amazing clients.
Anything further?
I want to add, maybe on founder wellness, actually, we haven't spoken about that. Being an entrepreneur is such a weird, isolating journey that nobody understands what you're going through. And then sometimes even your team doesn't understand if you can't always share everything
employees a lot of
with
the
them.
times.
Yeah, I'm sure when you
just,
rented out the house for 4 months, you didn't tell your team that, hey, in 4 months, we have no idea what's going to happen. But you have to take that on and still be incredibly brave and, back your passion and everything, even when you don't know what's going to happen. So creating ecosystems also to just support founders through this incredibly difficult journey. That's really important.
What do you think?
I think definitely access to capital. I think we need, African founders and startups to be properly resourced to compete and execute properly. We can't keep going to war with butter knives. If you look at investment across AI startups in the NLP space on the continent, the highest that any of the startups have raised is probably like $2-3 million. How do you compete? How do you even start to do something that will, make a difference within the space. So I think really being resourced, and there's a lot of things that impacts, right? Your access to proper quality talent that can help you execute. And what I think ends up happening is that because the resources are limited, you end up having to make do with what you've got, and you end up just executing poorly. And that's not spoken about enough, I think. And then also just the mindset around investing in Africa. I think, that we've got a lot of challenges or opportunities, but really when investing in Africa, we're not looking at the current reality, but we're looking at the potential that Africa has. And it's through that investment that we move from the current reality towards that potential.
Great. Okay, we're going to have to end it here so that we can all have something to drink. Please join me in thanking this panel. And thank you all for joining us. And let's all go enjoy ourselves. Thanks for joining the BIG5D Podcast. The show is written, hosted, and produced by me, Charles Laughlin, Editor-in-Chief of BigFive Digital. We hope you enjoyed the show, and please subscribe, do all the things to get involved with this podcast. If you're interested in sponsoring or being a guest on a future show, please write to us at info@big5digital.org. Thanks, and see you next time.